Good morning, everybody. It is 7:29 in the morning on this beautiful July 5th of 2018. It is a day after the 4th of July. I hope all of you who are stateside, I hope you had a good and a safe Independence Day. And unfortunately, Independence Day, every so often, well, actually, I guess it's like every only, wow, I'm having problems with the words today. It always stinks when we have a holiday on a Wednesday, because then Thursday and Friday are the days after, and it's like in the middle of the week to have a holiday, and you got to kind of behave yourself if you're going to have to work the next day, or maybe you work in a job where you don't have to behave yourself. So anyways, let's go ahead and take a look at these markets. We had some good moves really early this morning, and overnight, and we should look to see some of these moves continuing. Certainly yesterday, not a lot of activity due to the holiday. We were expecting that. So I did put in 2 trade ideas for the day today, just earlier, like at the top of the hour here at like 7:03 a.m. US dollar, Canadian dollar short, and a dollar yen short as well. Let's go ahead and take a look at the trades from yesterday. We wanted to go long on gold at 12. No, I'm sorry, that was on Friday. No, Tuesday. Actually, we could go over Tuesday's trades too, because a lot of the trades that we put out yesterday were the same trades as the ones on Tuesday. So yesterday and Tuesday's trades are pretty much the same, so we can go ahead and look at those. So gold trade, we wanted to go long at 12.47 on Tuesday, and that has worked out very nicely so far. We can see that we're touching the upper band of this cloud on the 4-hour, but the lagging span is above the price action here, and we should see the Kumo, the cloud here, turn and become green here fairly soon. If we look at, let's look at all the market geometry over on this side. Yep. Am I doing this right? Oh yeah, I had the right chart up. Okay, so the gold trade taking the long, based again not on the Ichimoku, but based on the market geometry and the time cycles. But certainly we could have a bias for going long on the Ichimoku with the hourly. I'm currently working on a pretty more detailed Ichimoku kind of a session, or a couple sessions, going over more specifics again, and kind of going through the entire system as a whole, and talking about the other ones. There's so Goichi Hosada was the man who created the Ichimoku system, and I'm having difficulty finding his written work, but there was a gentleman who came out in 1996 or so, Hidenobu Sasaki. He is the author of the Ichimoku system that we know. I mean, it's the same system as Goichi Hosada, but Hidenobu Sasaki, he published a book on the Ichimoku system, and it was the top-rated trading book in Japan for like 8 or 9 years in a row. The only thing is I can only find the book in Japanese. I can't find I can't find an English version. So anyways, here we go. Okay, so we had that the euro trade. Let's see. So wait. So we had the gold trade we were talking about. That's worked out nicely. The pound dollar. We wanted to go long in the pound dollar at 131.93. That has worked out. One thing I want you to notice though is that this angle that we're coming up against and this either major mid harmonic or the inner mid harmonic, there's a number of instruments right now that are right up against this. So this can be very difficult for us to cross above. It can be hard for us to want to trade above this, but it also means we're nearing a breakout zone. So the pound on the 4 hour is about to, it has almost has a condition met for breaking out on the 4 hour. And that's just when the lagging span crosses above, which will bring us right above this angle here. And when the pound does break above, that's going to be a pretty nice ride higher. Okay. So the pound dollar, actually, we could, at 132.79. Oops. That's on the 4 hour Ichimoku. Okay, and then we have the other trade on Tuesday. This is about the same entry as the one we had yesterday, 1683 versus 1673. That's the euro trade. And so on the euro, we wanted to go long at 168.83 or 116 or sorry, 116.83 or 116.73. And very, very obviously, we can see that that is working out very nicely. We are well into that trade here. You know, the 4 hour Ichimoku is telling us that the entry we had at that 83 level worked out perfectly. I mean, Ichimoku is phenomenal. If you've been with me in the morning for any length of time, well, I guess for over the last few months, then you'll know that the Ichimoku system has a pretty phenomenal and a high degree of positive expectancy, and you can do very well with it. The New Zealand dollar, we've got a beautiful inverse head and shoulders set up here in the New Zealand dollar on the 4 hour chart. We are coming up against the cloud though on the 4 hour, and we are very, very elevated in the 4 hour, but I'm really not worried about that because we have so much support going on. Should we expect some type of pullback soon? Maybe, possibly, but we wanted to go long at 67.88, which is working out. We are elevated in these condition our oscillators, so just be aware of that. I mean, I'm not overly concerned about them. I think we move higher regardless because we've been in such a down drive. And then the last one we had was the Aussie dollar, where we wanted to go long at 73.97, and we can tell that that one is working out pretty nicely. In fact, I think that we have a good long condition met here on the hourly already. If we look at the 4 hour, 4 hour, we were discussing this a little bit the other day, but the cloud is quite heavy up here, and the lagging span, you'll often see the lagging span act as just as price does, where even though price would be trading out here, the lagging span can respond off of this previous forward projected price and get rejected off of it. In fact, we can go back and see this happens quite often where I'm trying to find an example where, okay, like this area activity right here, oh, no wonder. So this price action here is the lagging span back here. So whatever was trading right here. Okay, here we go. How about a good example would be of this. So let me do the market replay real quick. I'll just set it right there. So we see watch the lagging span here as we hit play. Watch price action. So there's a lot of people who would consider going long on the 4-hour without waiting for the lagging span to give you the confirmation, which is lagging span is our signal. Okay, now watch what's happening here. So price is above the cloud. It's got pretty bullish momentum, right? However, lagging spans inside acts as resistance from the bottom to the top of the cloud. It acts as resistance when you try to get into it from the top or the bottom. And so people may be wondering, well, why is price falling here? I mean, we have the trigger line above, and we've got the price trading above. Why would we be trading down from there? Look at the lagging span, because the lagging span will respond to strength to resistance and support levels just like the current price action does. Okay, it will respond to the same strength and resistance levels in the Ichimoku system. So it's getting rejected inside the cloud. Okay, and then when we fall down outside of the cloud, that is a good signal to actually consider going short. Then we can see this activity happening here. Choppy trading. All right. So anyways, that is something I want you to pay attention to and look at and monitor is the current position of the lagging span. Now, we have an inverse head and shoulders set up here on the Aussie dollar on the 4-hour. And we know that out of all the patterns, I was just reviewing this in the chartered market technician material, that patterns, for the most part, they don't have a very high positive expectancy rate except for a few, and the head and shoulders is one of the highest probability of forming constructions. And so I do, because I like to trade with a lot of risk. But if I know that head and shoulders pattern is a high probability pattern, a regular head and shoulders or an inverse head and shoulders, although I don't know why. I know why, but I feel like the inverse head and shoulders has more of a positive expectancy than the regular head and shoulders. But if we know that this type of a pattern has the highest probability of playing out and price action responding to the behavior of this type of action, then I know that there also has to be not an equal, but a fairly high probability of the construction to actually form. Okay, because most of the rejections and failures of a head and shoulders pattern or an inverse head and shoulders pattern happen right at the neckline, where price will get up to here and then it'll fall back down. But regardless, price will like to get up here to finish the formation before continuing higher or getting rejected and going lower. But for right now, my viewpoint is that we actually move higher and we continue to move higher. And if you want to wait for a break of the neckline, that's cool. Otherwise, I mean, I am totally comfortable taking a long in here. Maybe later on in the afternoon. We'll see, though. All right. Okay, let's kind of run down these guys one more time. So we've got gold. Gold trade is more than likely moving higher. Because I believe we are moving higher, not believe, I know we have the highest probability of moving higher here because of this angle and the time cycle and all that jazz. I will probably want to wait for the lagging span to get above the baseline here. And so the 1259.45 is a good long condition on gold. The dollar yen We're still short. Continuing to hold that short and see how much farther down we can go. Looking forward to this drive lower, actually. If we didn't get into short early this morning, if we're waiting for the next short opportunity, then we're going to have to wait for the lagging span to go back down below price. And so we'll be looking at the 1140, 111.40. Sorry, 110.40. That's based on the 1 hour Ichimoku. Look at the 4 hour. That'd be a pretty nice entry there too. So be on the lookout for that. US dollar, Canadian dollar. Gorgeous short opportunity here. I mean, even the present value area is good. The 4 hour chart, we have great conditions for being short here. I mean, this is just a phenomenal. A great short opportunity in there. Aussie dollar, we've done. Maybe not taking a trade on that one right now. New Zealand dollar. Watching that one. The euro dollar. We did not put a trade for this one because, and I don't know why, we probably should. That's the 4 hour. What's the 1 hour look like? Oh, that looks really fakey to me. How far away from the baseline are we? 1676. We're not too far. We could probably buy in a pullback to the 1690. Maybe just to like 117. $117 to 116 or to 168. That's on the 1 hour Ichimoku. Gold's really getting a little drive going on here. I'm watching this play out. That's pretty nice. Like to see that happen. Pound. Yeah, that one's going okay so far too. Not too worried. Pretty nice steady drive up, and we see the baseline is continuing to act as a strong support level. That's good to see happening. On the 4 hour, you know, we are seeing all the conditions met except that lagging span. See, this is the other thing to notice, is that the lagging span and the current price action, they both found resistance up against this angle. So it's normal to see some selling here, but I tell you what, once we do break this, we should have a pretty significant rise from this zone. It should be a pretty heavy drive up. I wouldn't anticipate a slow rise at a break of this angle and this mid harmonic, intermid. US dollar, Canadian dollar, showing off some weakness here while we've been talking. That's kind of cool. Let's look at cryptos real quick. Bitcoin showing a lot of strength. There's been a lot of attempts to try and sell this off here, but we keep finding rallies and we keep finding support at the baseline here. On Bitcoin, we can see that we're finally above and trading above the 4 hour cloud now. And we have not actually traded above the 4 hour cloud with bullish momentum since, well, yeah, back on April 11th, maybe. So we see buying pressure coming back in. We see, what is this saying? Oh, ISM. We see the baseline holding as a support zone. So we're just watching a lot of continuation. We see these continued BART buying things going on here. And we're seeing that reflected in all the other cryptos as well. Ethereum's getting a nice bid. Ethereum's going to have a nice 4 hour breakout of the cloud here. if we can get there. Litecoin, similar thing. We want to get a break above to that 87.76. Cardano, I love Cardano. It's a fun one to trade. So we got a lot of them that are just kind of sitting in these zones where they're just kind of pausing and resting, and then more than likely, you know, between now and Saturday, we'll see a big drive higher, a big price spike higher. That has been the behavior so far. Okay. All right. Other than that, you know, I don't really see a lot of other things to take a peek at. You see the dollar yen just caught a bit of a bid here, but still inherently bearish at this level. All right. There's the Aussie dollar, New Zealand dollar. Everything's trying to do a little bit of selling up here, but it's getting bought back up. Some short traps going on, that's for sure. I want to make sure that I have a euro resting order at wait, that's the pound. I already have a trading for the pound. What am I looking at? The euro. The euro. Probably not a bad. I hate buying up here, even though it's it'd be okay to do. Ugh. Well, if we get the pullback, that'd be fine. But if we don't, just. Man, that's a hard one. One moment. Okay, I have a buy stop in. I just put a buy stop in at 117.15. That's where my buy stop is, just 4 pips above here. Other than that, yeah. Anyways, those are the trades for the day. We've had a pretty good week so far, even though it's been a holiday, and we should continue to see the dollar sell off. I mean, if we're looking at the dollar index, I forgot to point that out, is that dollar index, we're at the swing low showing up, but on the 4-hour Ichimoku, we are in a we're in a strong selling condition here. By the way, this fold-back pattern seems to be playing out so far. That's pretty cool how that works. So we should continue to see some selling, maybe all the way down to here in the dollar index, which means all the other pairs that are paired against the dollar should do better. Excuse me. And that is that. Yeah, some great trade opportunities coming up here, and we should have a good time and watch some real drives lower. I think the biggest mover that we have yet to see as far as a huge like throw up in price going downwards is the dollar yen. The dollar yen still really needs, we still really need to watch this one just really fall down hard. It has not done that yet. You know, we are, this is kind of a cool thing to look here, and I'm pretty sure it is at that 50% level there, but yeah. This is a good representation of the natural, how markets are natural and non-random, and how a lot of the many of the different ways that we analyze the markets, they all kind of tell a different story but have the same ending. So between these two swings, here's the 50% retracement level. That's right on this pivot harmonic of 110.71. And in the Ichimoku system, so this is where this is what I mean by it's the same. It's a different. The story is being told differently, but it has the same ending. And in this respect, we have the Japanese Eastern style technical analysis, where instead of using the Fibonacci ratios, that baseline, the Kijun-sen, that is like the 50% retracement level. All right, that is like the 50% level in Fibonacci. That is like the 50%, and it's like that. That's just how it is. It's like a traveling 50% retracement. And then we also, we have those three confluent zones of that being a 50% retracement level. And Gann always talked about 50% being the highest probability of price finding a stop or reversal. So that is what we're looking at right there. Price getting rejected off of the 50% level in this most recent swing, in the 50% retracement in that Fibonacci. It's been rejected at the baseline, which is like the 50% retracement. And it's been rejected at a natural harmonic level. Okay? I have to actually make a screenshot of this because I'm thinking of writing a book on Ichimoku and Gann, because there's nothing written about, there's no literature implementing both. There should be. Anyway, we've got that going on for us, and certainly we should see the dollar yen continue to nosedive, and it's a good area to watch it happen. So anyways, I hope you guys have a great rest of your trade day, and I look forward to talking with you tomorrow. Bye-bye.